Day to have a good day.
Live today. Kurt, whenever you're ready, sir.
Okay. Yeah, thank you for everyone coming. I know we have a couple other people that are supposed to be signing on, but we will get started. Thank you for showing up. What we have here right now is some current and old board members from RA Greater Phoenix. And we have a few other people joining as well. But for those of you that do not know Tom Truong, he was the 2019 national president of ARIA and one of the early adopters at EXP, where he grew that brand tremendously. And he became interested in trusted smart chain, brought it to my attention. And after seeing the real world use, the utility of the blockchain on how it solves some of the issues with selling commercial real estate, especially when it's a larger asset, when it's a single asset for a family, it just made a lot of sense to me. So I ended up buying a few nodes and becoming an early adopter. And then over time, when they started hitting all their milestones, I ended up buying more nodes, which you'll find out about. And I'm up to 28 nodes and hope to buy more in the future. They have some important milestones coming up in the near future. And as soon as they hit those milestones, I'll be buying some additional nodes. So with all that in mind, I'd like to turn it over to Travis Flaherty, who's just a business development person for Trusted Smart Chain and an expert on cryptocurrency, and could talk about this particular blockchain that is solving some real world issues, real world ability for assets to be sold on blockchain. So Travis, would you like to take over?
Well, thank you guys very much. I do appreciate the opportunity to be here. Thank you for the invitation.
Hey, Travis, sorry, I got to interrupt a little bit, folks. I've known Travis now for 9 months, and Travis is an incredible businessman. He is basically my mentor in this brand new space, and I'm fired up about it. I couldn't have lucked out and picked a better mentor to be involved with, to lock arms with, as I believe Travis is going to help me change my generational wealth for quite a while. And if you hang in there and you pay a lot of attention, take a lot of notes, he'll cover the history of blockchain, cryptocurrency. He'll go through his story, which I totally love, how he's been trial tested, battle tested, came out winning. And then at the end, he'll share with you the node opportunity, which I believe is generational wealth changing. Go ahead, Travis.
Thank you, Tom. I appreciate that. And thank you for the invitation to be here today, Kurt. I do appreciate that as well. And for each and every one of you giving me an opportunity to be able to share the vision of Trusted Smart Chain with you. A little bit of my background. So I had been in cryptocurrency now for almost going on 11 years now. I had a very good friend of mine that approached me about Bitcoin back in 2011, and he tried to get me to invest in it. And I listened to a little bit of how he explained this concept of digital currency, and I thought it was a scam. And I told him not to invest, and I told him to put his money elsewhere. And he did go ahead and invest. He put some money into it, and then he kept putting money into it over the next few years, and ultimately ended up with a portfolio. Back in 2020, the last time that we had talked about it, he had over $50 million worth of Bitcoin. And the moral of the story is I didn't, and felt like I always missed out on a pretty big opportunity. In 2016, this same individual approached me about Ethereum. It was a new project at the time that was launching. They were introducing smart contracts, and smart contracts really paved the way for thousands of meme coins and the whole pinnacle of all hype in cryptocurrency over the next few years. And so I started mining Ethereum in the early days, and did very well with that particular project. I wrote Ethereum all the way from about $30 a coin, all the way up to about $5,000 a coin, and so did very well there. We were pioneers in the early days of tokenizing real world assets, the early discussions of taking a high valued asset and bringing it onto a blockchain. Up to that point, it had never been done before. And what I loved about that was this idea of moving the industry from hype and speculation to a place of tangibility and substance. At that time, there was not a lot of clarity. There was not a lot of framework. There was not any regulation. The government really didn't have their arms around cryptocurrency. and the banking system was fighting back. And so, the entire crypto industry was calling for clarity, and what we ended up getting was enforcement. A lot of lawsuits started happening, a lot of claims that were made about these companies or these different coins being securities or not being securities. The different enforcement agencies couldn't agree on it. Companies like XRP and Binance ended up getting sued. I was part of a company that was one of the pioneers of tokenizing commodities, things like oil, natural gas, and gold. And they ultimately ended up getting sued because they were selling an unregistered security based on the government's definition at that time of what was and what wasn't a security. And so it was a really challenging time. It pushed a lot of innovation outside of the United States. And unfortunately for me, I was one of the bigger node operators, and I was also the top affiliate, and I was brought in to help them expand their and build their community all around the world. And so when the company owners ended up getting sued civilly for selling an unregistered security, I actually got drawn into that lawsuit as well. I guess it was one of the first times that it didn't pay off to be, again, the top salesperson in the company. And so we had a choice, and that choice was we could either go and pay a big fine for marketing or promoting and selling an unregistered security, or we could go fight the US government and challenge their position on what was or wasn't a security. Neither one of those pathways, by the way, were very attractive. But, we felt like at that time, what was happening wasn't right. Essentially, it was kind of like driving on the Autobahn where there was no speed limit, and yet they could pull you over for speeding whenever they wanted to. They weren't giving any clarity. They weren't giving any pathway forward for these companies to be able to progress. Overnight, they came out and said that Bitcoin wasn't a security, but pretty much everything else was a security. So they pushed the entire cryptocurrency industry into a gray area. And if you're a security, you have to register as a security as an investment with the Security Exchange Commission. The problem was they didn't give any pathway forward for the cryptocurrency companies to be able to do that. And if you tried, they would reject your application because it had cryptocurrency on it. So it's a very difficult time. It's referred to it as the war against cryptocurrency. And that lasted for about 4 or 5 years. We chose to fight the US government in their position. And we went to court and we spent millions of dollars battling the SEC. This was a David versus Goliath case. It was in the media. It was on the front page of Yahoo Finance and Bloomberg and everywhere else. And, the of that meeting was pretty significant. The eyes of the cryptocurrency industry were upon us because the ruling on that particular case would go on to set case precedent for a lot of these other lawsuits that were taking place. You guys probably have read about the lawsuits against XRP, the lawsuits against Coinbase. Coinbase had operated legally for 7 years inside of the United States and previously had permission from the government and was as an exchange. And then 7 years later, all of a sudden they were being sued. And so, the end result was we eventually won our case. And not only did we win our case, but the SEC was actually fined millions of dollars for deliberately and intentionally creating false narratives in the media about the case. The SEC attorneys that brought the case forward against us were actually terminated from the SEC, and they even had to close down the regional office that brought the case forward against us. So this is a pretty big deal. And what it did is it shed light on the abuse of power that was happening at the hands of the SEC. A few months later, Gary Gensler ended up getting closed down. He ended up getting grilled on Capitol Hill by all kinds of congressmen and women about his abuse of power. A few months after that, Gary Gensler ended up stepping down as the head of the SEC. Paul Atkins came in, and then we had a new administration that took over, and everything changed. They overnight that the war against cryptocurrency was over, and that they were now committed to making the United States the crypto capital of the world, and that they were committed to providing the clarity and the framework that had been lacking for all of those years. And we've made some huge strides over the last 15 months or so. We've seen the Genius Act passed, which now holds these stable coins, these stable coins accountable. Executive orders have been signed that now allow banks to be custodians over your cryptocurrency and even sell you cryptocurrency. You can now utilize cryptocurrency to qualify for mortgages. I'm in the process of that right now, and I utilized my cryptocurrency to qualify for my overall reserves. So last year alone, cryptocurrency was in the headlines in the media no less than 20,000 times. So it's a very exciting time because, at one time they were saying that cryptocurrency would never be integrated into your mutual funds and investments and institutions. And now, of course, we have ETFs that have been integrated. You have it's being integrated into your 401ks. And so now these same banks that were telling you just 3 or 4 years ago that cryptocurrency was a decentralized Ponzi scheme, they're now adopting cryptocurrency. They're filing patents, they're building infrastructure, and they're integrating it into all facets of their business. And the government that was once really pushing back against cryptocurrency is now fully behind crypto 100%. And so that creates a very unique window of opportunity. And I always say that the windows of opportunity in this industry, they don't open very often and they don't stay open very long, but when they're open, incredible things can happen. And going through that experience, and I'm going to tell you guys, it wasn't fun. We spent millions of dollars. We were, attacked in the media. I mean, it was time. But when you go through something like that, it really gives you a different perspective of the challenges in the industry. And it all stemmed from a lack of clarity. And so we started asking ourselves, how can we be part of the solution? How do you build something that people can truly trust in the cryptocurrency space? Because believe me and trust me, if you've ever lost money in cryptocurrency, I feel you because I've been there. Um, how do you progress the industry forward in such a way that you help cryptocurrency move from a place of hype and speculation to a place of tangibility and substance? So my partners and I came together, and we all have a unique background and experience and skill set. So one of my partners, Matt Nicosia, is an expert in Wall Street. He's taken 6 of his own companies public, rung the bell on the stock exchange. He and his team of advisors have collectively taken hundreds of companies public, and they have a very unique skill set of helping take these companies to the capital markets, but structure properly, get through the audit stage, the registration stage with the SEC, and then the marketing stage that allows them to be able to go do their capital raise. And they started seeing a pattern about 6 or 7 years ago, and it was widespread manipulation in the capital markets. These companies that were going public, all of a sudden, they were up against companies like BlackRock and Hindenburg that were shorting stock, but they legally were allowed to manipulate and can manipulate the stock in their favor. And they're doing it through dark pools. 85% of stocks that are sold today are sold through these things called dark pools, naked shorting. They now use bots, they now use front loading to manipulate the stock in their favor. And so it's a very risky proposition if you're a small cap company that's wanting to go public. And so Matt and his team started looking at blockchain as a solution because blockchain is far more cost effective. It reduces the risks that a lot of these companies that are trying capital going to the capital markets are exposed to. And so my other partner, Billy, is a blockchain expert. And we started looking at the different blockchains that were out there today. And none of them were built for this new era of crypto that we're going into, which is regulation and compliance. We're moving out of the hyped up meme phase, and the page is turning and the chapter is turning, and we're moving towards more regulation and compliance. Right now, as we speak, they're meeting on the Clarity Act. It's expected to pass here very soon. A little bit of a holdup between the banks not wanting competition with these exchanges that are going to offer 4 or 5% percentage on your money when you stake, and these banks don't want to pay you anything because that's how they make their money is with your money. But I think that they'll get through it and they'll come to a compromise, and that's the last piece of the puzzle. And so we looked at the state of cryptocurrency industry a few years ago and said, let's create a layer 1 blockchain that's built with regulation and compliance in mind that helps to move this industry forward, which is focused on the tokenization of real world assets. And that's what we're going to be talking about today is trusted smart chain. So, I like to think that, Tom always says we're battle tested. We've been through, and sometimes you go through those challenges in life to push you down a different path to exactly where you're supposed to be. And beautiful things sometimes come from the difficult and challenging circumstances. And that's essentially where we are today. So I'm a co-founder of a company called ProsperLink, and we hold the exclusive contract with the governing DAO for a layer 1 blockchain called Trusted Smart Chain. Trusted Smart Chain is not owned by anybody. It is fully decentralized. It is governed by a legal charter, and that governance is overseen by the node operators. So it's run by the members for the members. Now, we're going to share some information today that is about Trusted Smart Chain nodes, which are licenses, software licenses that support the operations of the Trusted Smart Chain blockchain. These are not classified investments. The SEC came out in March of last year on the front page of the SEC.gov, and you can look this up. And they finally provided the clarity that we were lacking, which was proof of work and proof of stake mining is not considered a security. Had we had that clarity 4 years ago, we would have saved millions of dollars and not had to go through the battle that we with the US government. So trust nodes are not classified as investments. They're actually classified as software. Now, because of that, we're not allowed to guarantee income or profits or financial returns of any kind. So the analogy that I would give you is you could go buy a Bitcoin miner today on eBay. They'll ship you the computer, the hardware. You could activate it. You could connect to the Bitcoin network and you could start mining Bitcoin. You start earning Bitcoin for the support of their network. But there's nobody at Bitcoin that's going to guarantee you profit, or there's nobody that's going to guarantee you any type of income or financial return of any kind. If you choose to do so, you do so because you believe in the Bitcoin tokenomics. You understand that unique fixed supply design, along with an asset that's becoming more and more scarce, has led to an asset that has outperformed any other asset class on the planet by miles over the last 10 years. So at the end of the day, the only guarantees that we can offer is that you will receive a daily distribution of the Trusted Smart Chain token every single day for the next 120 years, as long as your node is active. So with that, again, we built Trusted Smart Chain with regulation and compliance in mind. The idea was to bridge the gap between high-valued assets and blockchain. We wanted to give them a universally accepted framework for tokenizing real-world assets that held these real-world assets accountable, but also provided investor protection on the other side. So if you're newer to blockchain is the infrastructure to all cryptocurrency. Every cryptocurrency coin that's out there lives on a blockchain. A blockchain is a ledger. It's a diary, essentially, that records every single transaction that happens on that blockchain. And for the way that it works very simply is, let's say that Kurt wanted to send me a transaction, a crypto transaction. He'd open up his digital wallet. He would decide which cryptocurrency he wants to send me, the amount that he wants to send. I would give him my address. He then completes that transaction. Now, what's happening behind the scenes is a block is created that has all of the details of that transaction. And it's then broadcasted to all of the nodes in the network. Now, these nodes pre-programmed with consensus mechanisms that are designed to validate the transactions that are happening on that particular chain. So what happens is they go to work, they validate the transaction, the block is now added to the chain. Once it's confirmed, the money is sent from point A to point B. Now, a couple of things here that I want to point out. If you look at number 4, there's a question mark in the middle. And in a centralized system, that would be the banks, that would be the clearinghouses. In a decentralized system, those banks and clearinghouses have been removed. They've been replaced by independent node operators that are all running independent nodes. There's no central entity that's controlling these nodes. The second thing I want to point out is without those nodes, a blockchain doesn't exist. Without a blockchain, cryptocurrency doesn't exist. Now, I want to talk about tokenization of real-world assets for a moment because this is a big conversation. It's one of the main focal points, main focal point in banking today. And what's happening is tokenization is using blockchain technology now to break down these physical or these digital assets into smaller tradable units, which makes ownership more accessible, it makes it more secure, and it makes it more transparent. We're seeing everything tokenized today. So luxury hotels, even artwork, existing businesses, commercial and residential property, oil and gas companies, sports agencies. We've got all kinds of different companies that we're seeing tokenized. I want to play a video for you, just a couple of minutes long, that will help you to see just how big of a conversation this really is. These are some of the heads of world banks and some of the biggest institutions in the world, all talking about tokenization here just this last year and how much impact it's going to have in the world.
The world is turning value into code. Tokenization is the next evolution of ownership. Programmable, auditable, and instantly transferable.
If you think about what tokenization is, it's essentially upgrading the ledger where capital markets run to a better ledger technology that is public, that is distributed, cryptographically secured, which will improve how people transact with securities.
The future is about assets, not just crypto tokens, but everything we value. On-chain.
I would say the biggest question from central banks is, well, what is the role of tokenization and digitization? It will be changing the technology around the plumbing of finance.
Institutions are building the rails, from stocks to real estate, From bonds to private markets, tokenization liberates assets.
Tokenization, we see that as an evolution of the financial securities market. With tokenization, you will certainly be able to reach out to a bigger range of investors. You will get access to finance to many more people.
This isn't a side trend. It's a market structure upgrade. Settlement speed, global access, and fractional participation.
Tokenization is a freight train. It can't be stopped.
It's a very efficient technology. We think it's going to open up a lot new investment opportunities.
I agree that tokenization is probably an accelerator of the diversification of the monetary system and diversification of currencies.
The future of digital assets isn't coming. It's being built. Right here, right now.
If you take this one thing away this weekend, take this away with you, and that is the biggest evolution in crypto will be the tokenization of real-world assets.
Tokenization is the future. Tokenization is the model. And if you refuse to adopt tokenization, then you will be disrupted.
I'm interested in what is essential to our well-being as a society. I'm very interested in how we...
When I heard about tokenizing real-world assets, I got excited.
Now we get to do a lot of the fun stuff. Even though there are pivots and actions, the vision has never changed.
So this was an event that we held a few weeks ago in Puerto Rico. The gentleman with the funny hat, by the way, is Brock Pierce. Brock Pierce was the founder of USDT, and he was speaking at the event along with many other tech giants. Puerto Rico has become a major hub for cryptocurrency because all of these millionaires and billionaires all moved to Puerto Rico because of the tax benefits. And so it's a major conversation. To give you some perspective on just how big this is, just a few years ago, if we go back to 2021, we saw about $2.6 billion in assets that were tokenized. This is when we were pioneering this space. There wasn't a lot of clarity, not a lot of framework, battling going on with the government about what wasn't a security. You had last year, 2025, we saw $500 billion in assets tokenized. Why? Because the entire sentiment of the cryptocurrency industry changed. The banking system came on board with cryptocurrency and the government got behind it. Over the next 4 years, and this is staggering growth, it's projected that the tokenization of real world assets will hit conservatively $16 trillion. To give you some perspective on that, the entire US national debt is $40 trillion. So we're talking about 40% of the entire US national debt from an asset standpoint will be tokenized. So the question that we have to ask ourselves is why? Why are we suddenly seeing this paradigm shift? And all of these companies are now utilizing blockchain to raise capital. The answer to that question is the alternatives are they could go to equity. Private equity wants them to give up control, and they don't want to do that. They could go to the capital markets, go public. The problem is the cost of capital today is about $5 million on average. And let's say that you do make it through the registration process. Congratulations, the day that you ring that bell, your dollar turns into 80 cents overnight because of the massive manipulation. So now what these companies have figured out is by utilizing blockchain, it's about 1/20th of the cost, and you're not exposed to those same traditional risks. But there are challenges, and those challenges are why we built Trusted Smart Chain. The challenges come from a lack of regular regulation and clarity, So to give you an example, if you wanted to take your company public, there's a checklist, there are laws, there's a roadmap that you have to follow. And if you don't follow it, you're going to go to jail. In the world of cryptocurrency, none of that exists, and it's left a lot of room for bad actors. Now, we have seen the industry starting to turn that page into what many refer to the slope of enlightenment, right? The discussion in 2021 of taking cryptocurrency coins and them by high-valued assets was a major step in the right direction. Because think about it, you have thousands of these meme coins that have no intrinsic value. They have no purpose whatsoever. You have rug pulls. You've got all kinds of misleading claims, outright fraud in that space. And then all of a sudden, you start having a conversation where you can buy tokens that are backed by things like gold or oil or real estate. All of a sudden, you start to bring tangibility into the conversation. But how do you go about doing that? That's where the confusion is. And so what we did is we looked at this and said, we're going to develop a universally accepted framework, a regulatory pathway for the tokenization of real world assets. And that's exactly what we've built. So number one, we made a decision up front that we are only going to focus on real existing businesses with cash flowing assets. We're not interested in the speculative or unproven projects. You've got all these meme coins that are out there. They've got these mascots with dogs and frogs and cats with space helmets on and all of these crazy tokens. And again, they have no use at all. There's no utility. It's all about the marketing and that is what drives the sales in the short term. And usually they always end up crashing. On the other hand, there are a lot of really solid businesses that are out there and assets that want to raise capital. And that's who we're focused on. So what we do is we require now every single one of these real world assets to actually be fully compliant and registered as an investment meeting SEC regulations. So that means that they have to get independent audits up front, annual audits thereafter. They have to make sure that all of their assets are properly valued, that they're properly tracked, that they're properly secure. We want reporting when it comes to the asset value, the ownership, the transaction history. This now holds the real world asset accountable. So what we're doing is we're helping cryptocurrency grow up. And we're doing that is if a real world asset is unwilling to go through a regulatory process that includes starting by getting an independent audit. I mean, what a novel idea to establish true value of the asset or even that it exists. And then B, bind that asset through a smart contract that actually leads to a shareholder log. And this is the key that now allows you to go buy shares in the form of digital tokens that give you ownership in that high valued asset. Now, what we have is a digital version of the stock market. Think about it. When you buy a certificate of stock, you're essentially you're getting a right of ownership. And in some cases, a right of distribution if you invested during their pre-IPO. Now, it's not enough to just say, hey, our token's backed by, a gold mine or backed by oil. We are now and have built a platform where the regulation and compliance is actually baked into the infrastructure, into the launchpad itself. And it actually is creating a shareholder log that now allows these new investors that are coming into cryptocurrency that don't want to go and gamble. They can actually now buy tokens that give them ownership in the high valued asset. And that is how you build something that you can trust and ultimately something that appeals widely to the entire world. And that's what we've created. So people ask me all the time, how are we different? How do you separate yourself from other out there like Ethereum or Solana? There's thousands of other blockchains that are out there. We are the first in the entire world, to our knowledge, to implement these standards. I'm going to play a little 70-second video clip for you guys. This was in Washington, D.C., and I was standing right outside of the White House. And in this particular video, I happened to have my videographer there with me. And we're sitting there and I'm looking at the White House. We were there because we had just been recognized for Blockchain of the Year, which, by the way, was a pretty big deal, knowing that 4 years prior we were fighting the government. And we were there in attendance, there were all kinds of senators and congressmen, and the speaker was there. And they were recognizing us because of our contributions and impact in the blockchain world. And so this particular video, I happened to just say, hey, film this for a second. And this is what came out, and this will help you to understand our meaningful purpose in the marketplace.
People often ask me, how is Trusted Smart Chain different than any other blockchain that's out there? I was recently having a conversation with ChatGPT, and I asked the question, how many blockchains are out there today? And it said over 1,000. And I said, okay, how many are true layer one blockchains? We're not talking about, an extension of Litecoin or some type of a white labeled blockchain. And it came back and said 130. And then I asked, well, out of those 130, how many are fully operable? That means that their node network is active, their validators are online, they have the ability to be able to host a smart contract. And it said 30. And I thought, man, we are one of 30 layer one blockchains, which is pretty exciting. Then I asked the question, how many of those focus exclusively on real world assets? And it said 10. And then I asked the most important question, how many of those blockchains require every real world asset to file a registration A, register as an investment with the Security Exchange Commission, have independent front and annually thereafter? And it said 1, Trusted Smart Chain. You want to know how we're different? We're raising the bar in this industry.
So it's not enough the previous blockchains that came before us were built for speculative eras. I'll give you an example. So some of you or most of you probably heard of Ethereum. Ethereum is a layer one blockchain. They were most notable because they introduced smart contracts. They came out in 2016, and that paved the way for thousands of these meme coins and NFTs to launch. And most of them were built on the layer one blockchain, on Ethereum's blockchain. Well, what that did is it created tremendous utility use for that blockchain and drove the value of Ethereum up. But here's the problem. They don't care about regulation and compliance. So we could all come together right now and come up with an idea for a token. And I could have the white papers drawn up, which outlines how many the circulating supply is going to be, what the distribution is of those tokens, how they're going to be released. I could have those drawn up by midnight tonight. I could have it on Ethereum, Solana, or most of the other blockchains listed within 24 to 48 hours. And if we had clever enough marketing to convince people that this is the next token that's going to go to the moon, people would start buying it. And the value would start going up in the short term. Now, here's the thing. This new era of cryptocurrency, this new era of finance, if you will, needs blockchains that are built with regulation and compliance at the forefront, not an afterthought. And so we have built that regulation and compliance into the actual infrastructure, into the code of the blockchain itself. And that's the reason why we were nominated as Blockchain of the Year. Now, I want to be very clear. This is not a capital raise. This is not an idea. We self-funded the blockchain. It's already built. We have 39,000 nodes that are currently supporting our network all over the world. We have real-world assets that are already onboarding onto the blockchain. So we have oil companies, luxury hotels, sports, real estate companies, exotic car companies. I was just on a phone call 2 hours ago with another oil company out of Venezuela, believe it or not, that is to tokenize. So we have all kinds of different companies that are onboarding onto the Trusted Smart Chain right now. We have 12 that are signed. We probably have another 20 to 30 that are in the early stages of preparation right now. The average value of these companies is approximately $50 million. They're usually small cap companies, $50, $75 million, that are wanting to raise capital. They don't want to be exposed to the risks that exist in the capital markets. We also have built one of the most blockchain communities in the world. So we realize that there's a learning curve in cryptocurrency, and sometimes it can be painful and expensive. If you think about it, if you go buy Bitcoin or Ethereum or XRP or Dogecoin or whatever it is that you're buying, and you have a question, there is no customer support that you can call. They don't exist. They're fully decentralized companies. So we decided to build a community. Trusted Society has thousands of members, and those members get access to all kinds of weekly Zooms that we host, social communities that we host where we're constantly doing education. They also get access to our events. So we've held 9 events last year. We've already held 2 this year, one in Scottsdale, one in Puerto Rico. The next event coming up is in Cabo next week. We have an event down in Cabo, and then we also have an event at the end of the month. It's our 1-year anniversary celebration in Las Vegas on March 28th. And at these events, we do education. The real world asset managers that are tokenizing on our blockchain come and, our attorney, who is one of the most successful blockchain attorneys in the country, who's launched over 20 successful blockchains, comes and speaks. And so we're educating the room, we're educating our community so that they can develop more confidence and competence in this space. One thing that I've learned is that if we fail to adapt and we fail to innovate, we're going to continue to see people struggling and suffering. And right now, people are starting to wake up to this idea that if you put all your faith in the US dollar, that's a challenging position to be in. The last 5 years alone, just to give you perspective, Bitcoin's up 863% in the last 5 years. Gold is up 238%. The dollar is down 21%. So people are starting to wake up, and even conservative banks like Bank of America are now saying, listen, you should have at least 5% of your net worth now in digital currency. Do you realize how big that is based on where their position was just 3 to 4 years ago? So we had the genesis of our blockchain. We worked on it for years, from a concept to an idea to actually a layer 1 blockchain. We activated and had that genesis on March 29th of last year. Since that, and that, by the way, that's significant because that's when the token distribution starts for our nodes that are supporting the network. Our token is listed. It's trading in the open market. We're listed on the T7x.io trading platform. We've been trading in the $30 to $40 per token range, which is fantastic out of the gate. We've had great over the course of this year. You'll see us expanding outside of T7X onto other exchanges as well. We kicked off a belief building initiative. A lot of these cryptocurrency projects, they operate in obscurity. You don't know who the developers are. You don't know who the founders are. I mean, think about it. Bitcoin. Who's Satoshi Nakamoto? We really have no idea who it is. At the end of the day, it could be a person, a company. There's theories. It's Elon Musk. There's all these crazy theories. I personally think that it's Kurt. If you guys want to know the truth, I think Kurt is just keeping a secret from all of us, but it really could be anybody. My point is that kicked off this entire trend of companies that don't need to be held accountable. Because if you don't know who they are, I mean, they can do whatever they want. And so our founders are out front. Our development team is out front. Our real world assets are out front. Our community has access to updates all the time. We keep them abreast to what are the status of the real world assets that are onboarding. We have regular votes. They are stakeholders. So every node operator, every node they operate, they get a vote and they actually participate in the governance of the blockchain. So we operate in a complete, transparent ecosystem that helps to build confidence and trust in the community itself. Our goal is to bring 100 real world assets onto the blockchain in the first 3 years. Now, this is a very conservative goal. Internally, we believe that it's possible that we could bring thousands over the next 3 to 5 years. But 100 is the minimum goal. We have a very clear pathway to do that. You'll hear in a moment where those real world assets tend to come from. We also built our own self-custody wallet. So when you activate your license, you download your wallet, you are the only one that holds the keys to that wallet. Every day, you get a daily distribution that's deposited into your trusted smart chain wallet. And then from there, you can manage those tokens. You can send them to the exchange if you want to sell them and then put that money back into your bank account. So it allows you to safely and effectively manage those tokens. I invite you to go to explore.trustedsmartchain.com. This is where the validation is. Here you can go see the transactions happening in real time, the blocks being created on our blockchain. You can see what the current listing price is for the Trusted Smart Chain token. You can see how many token have been minted so far this year. You can see how many are currently staked at this given time. Everything is right there, right before your eyes. And so this is the validation of the blockchain itself. If it's any reputable blockchain project has an explorer. The interesting thing is, a large majority of the crypto projects out there don't have an explorer. So what does that tell you? This is really giving you a magnifying glass to be able to look into the depths of the blockchain itself. And to further that validation, we actually hold a CertiK audit. This is the gold standard in blockchain security. So a very, very small percentage, it's estimated that 2% of the entire cryptocurrency industry holds this type of audit. CertiK is a third party. They come in. It's very expensive. They audit your code, takes about 45 days. They look for vulnerabilities. They look for backdoors that maybe developers created so that your blockchain potentially could be hacked. And they look at the code and they want to make sure that the code matches what you're telling the public. And so you have to be willing to go through that scrutiny. And not every blockchain project is willing to do that because a lot of times they're misrepresenting what they're actually telling people, and a large majority of the time in the Bitcoin world. So if you look at the companies that hold a CertiK audit, we're talking about companies like Binance, Samsung, Crypto.com, Ethereum, Apple has CertiK wallet audit. So in a world full of hype and speculative projects, this type of audit, it separates the serious long-term infrastructure from those hype-driven experiments. Now, let's talk a little bit about the utility of the Trusted Smart Chain token for a moment. I want you to think about any asset. So this is a lot of you guys are in real estate, so we'll use real estate as an example. Anytime that there are limited homes that are on the market and the demand for those homes are growing, what happens to the value of those homes? They go up in value, right? If I were to ask you in cryptocurrency's case, let's take Bitcoin. Why did Bitcoin, which it was introduced in 2009, it didn't even have a monetary value assigned to it until 2010. The first transaction didn't even happen until 2011. And it was worth less than a penny when it first started. How does that turn into, at its all-time high in the fall of last year, $125,000 token? How does it go from point A to point B? The answer to that question, what do you think, Tom? Give me an answer.
Yeah.
What do you
demand increase in or utility and overall acceptance.
That's exactly it. Demand came, if you think about it, it was kind of a cycle because at first nobody understood it. You got these original tech people that were behind it, kind of a cultish like following. And then it slowly started to go up in value. And then the media started paying attention because it was going up in value. Well, that also ultimately drove more people to buy it. Well, more people buying it drove the value up even more. And then it created more attention. And then it was just a cycle from there. But in those early stages, the first even 5 to 7 years, it had zero utility. It was a speculative token at best. People were buying it because they just hoped to get lucky. It didn't become a utility token until around 2020, 21, where people are like, wait a second, this is outperforming every other asset class. It's outperforming the dollar. And people started buying it to hedge the dollar because the dollar was doing this. And now, today, retailers are accepting it around the world. Our banks are now integrating it. The government is buying it up and adding it to their strategic reserve. So now it has utility, right? It has purpose. So I use that example because in the world of cryptocurrency, and I really want you to hear this because whether you choose to get involved with us or not, I think that this could add value to any cryptocurrency project that you evaluate in the future. And that is this: value is not a derivative of excitement. It is a byproduct of use. I'll say it another way. Value is not a derivative of hype. It is a byproduct of functionality. So the best projects are usually infrastructure projects, and they're not exciting. You don't need all the hype and the marked up in the marketing, and you don't need the celebrities that are out there trying to get you to go buy the coins because they have use. They have real world use. And so what I want to share with you is the utility, because this is where we shine. And this is why we have serious professionals like Kurt and like Tom that are advocates for the trusted smart chain. It's because of our utility and our meaningful purpose in the marketplace. And I think timing has something to do with it. But ultimately, if we had no utility, then we'd all just be here collecting tokens that aren't worth anything. So one of the things that we formed a grant, and we take 25% of our node sales and we put it into this grant. Now, just so you know, we are selling 200,000 nodes. We have a hard cap that's outlined in our legal charter. That's all the nodes that we're going to sell. We have about 39,000 of those that are currently active right now. So when all is said and done, we will have put hundreds of millions of dollars into this grant. And any technology company can come and apply for a grant. Now, we typically only approve grants for companies that are focusing on real world assets. So let me give you an example of how this helps us both bring real world assets onto our blockchain and it adds to the overall utility. So T7X is a grant recipient. Now T7X is an exchange. So an exchange is where you go to buy and sell cryptocurrency. So Coinbase, Kraken, Crypto.com, these are all exchanges. T7X is licensed with the Security Exchange Commission. They're fully compliant in 7 continents around the world. But what they're doing is very smart because they're only choosing to list tokens on their exchange that are actual registered investments, that have actually registered with the SEC and been approved by the SEC. So think of Coinbase. Right now, Coinbase has hundreds of coins that are on their platform. My guess would be 15 to 20 of them are decent. The rest of them are garbage. That's just my opinion. They have no intrinsic value, no purpose, no utility. Some of them are working on their utility. They have ideas of what it could turn into, but they rely on their marketing and their hype to get people to go buy the token to hopefully drive the value. So T7X has chosen to only list companies that have gone through the audit period and been fully approved by the SEC. Now, what they're doing is they're catering into that new demographic that doesn't want to go gamble with meme coins. They want access to securities that give them ownership in a high valued asset. Well, Trusted Smart Chain made that possible. So the reason why we approved a grant for T7X, and by the way, we gave them a $50 million grant. We've satisfied about $7.5 million of that grant so far. So the reason why we are donating money to T7X is to help them go find real world asset projects to list on their exchange, because all of it is being built on the Trusted Smart Chain blockchain. So I'm going to give you an example of why this matters. Again, we've been talking a lot about Ethereum. I'll use that as an example. Ethereum is a layer one blockchain, just like us. They launched in 2016, launched smart contracts. All of these coins launched, and they were built on the Ethereum network. They require anybody, any investor that goes and buys any of those coins, anytime that you buy, you sell, you trade, you swap, anytime you interact with any of these thousands of coins, you have to go buy Ethereum first. Because Ethereum, you have to pay your transaction fees with the Ethereum token, the native token of the blockchain. That created utility that led to the second largest cryptocurrency project in the world. If you want to know the third, in the fall of last year, it was BNB. BNB is the native token for Binance. So just like Ethereum requires all those projects that are built on their blockchain to use their coin, Binance does the same thing. And that led to the second and the third most successful cryptocurrency projects in the world. Ethereum catered to the hyped up meme coin era. Trusted Smart Chain is the first blockchain in the world that's catering to the biggest movement in the world of finance right now, which is tokenizing real world assets. So ask yourself, with $16 trillion in real world assets coming down the pipeline, do you think we can capture a few hundred or a few thousand of those projects on our blockchain? And every one of them has to use the Trusted Smart Chain token. Now, in a minute, you're going to see why that matters, because who are they essentially buying those tokens from, Tom? They're buying them from the node operators, and they get to set the price. And we'll talk a little bit more about that here in just a moment. But hopefully you're starting to understand where the demand comes from. We're not creating some marketing message or hiring celebrities. We have real utility right from the very beginning. So to break it all down for you, T7X is an exchange. They're listing tokens that are registered securities. So Tulum Coin, Grow Estate. Tulum Coin, by the way, is luxury hotels down in Tulum. Tom has actually been at the hotels. He's met the billionaire that owns them. We held an event down there. Tulum real estate's booming, and so these guys are buying up property on the beach, and they're building these beautiful boutique hotels. So they're tokenizing, raise more capital. Grow Estate, medical grade hemp facilities across the United States and Canada. They sell medical grade hemp to countries like Israel. White Claw Crude, oil and gas company. These guys are all tokenizing on our blockchain right now. So they're listing on the T7X exchange. Why? Because they want to raise capital. So they'll go through a process. They'll file their audit. They'll register. Once they get approved, they open up their capital raise, and then they'll go out and they'll advertise that all over the world. We don't get involved in any of that. They'll go advertise. People will invest, usually because they're offering a 10% dividend during the capital raise. But what you need to understand is that all of this is happening on the Trusted Smart Chain blockchain. We're just the infrastructure. It's infrastructure ownership. It's like going and buying a token in the open market and you buy it at the right price before it goes up or potentially goes down. You are participating in the infrastructure, and you're earning daily digital rewards every single day. It's like going to the grocery store and buying a dozen eggs or owning the chickens that lay the eggs every single day. I'd rather own the chickens. I've operated nodes since 2016. I believe it's a more sophisticated way to get involved in crypto. You want to know my strategy that's led to me being successful in this space? It's very simple. I look for node projects. I get in early before there's a lot of people on the network, when the distribution is at its highest. I look past the marketing and the hype. I look for a meaningful purpose in the marketplace, and I look for really solid utility. Because if there's utility, that's driving the demand. The greatest benefactor of demand is value. So what I do is I'll go into a node project, I'll buy the nodes, and I'll concentrate on accumulation. And I go into every project that I go into with a minimum of 3 to 4 year mindset. Because that real utility projects, infrastructure takes time to build. It's kind of like putting a whole big a recipe into the oven, and then you just kind of let that utility bake a little bit. And then in 3 years, when everybody's wanting to buy the tokens, guess who's holding them? Me. And that's exactly, just so you know, my multi-million-dollar strategy in cryptocurrency. That's it. So what is a blockchain? What is Trusted Smart Chain doing essentially for all of these real-world asset token projects? A blockchain is just a node, a network of nodes. That's it. That's all it is. Decentralized nodes. And I want you to think of nodes like blockchain's version of cell towers. They all work together to make sure that the system works. They validate transactions. They keep the network secure. And if you own one of these nodes, for your support of the network, you earn the blockchain's native token every day, which is the Trusted Smart Chain token. And you will earn that token every day for the next 120 years. Now, what can you do with these tokens? I can go sell them today if I want to. Every day I could get my distribution. I could go to my wallet, send it to the T7X exchange, put them up for sale, take the money that I make, and go put it into my checking account. Now, I'm going to be honest with you. I think that would be crazy because some of you are familiar with the guy that sold over 10,500 Bitcoin for 2 pizzas back in 2011. And today it's worth $700 million. It's called National Pizza Day. I don't mine token, or I don't support infrastructure and earn digital rewards based on today's price. I don't care about today's price. I'm just going to be fully honest with you. I think we actually have a really, really good price for the fact of where we are. But today's price is not indicative of tomorrow's value. That's why utility is so important. So I want to make sure that you really understand the utility here. So we've already talked about this one here, gas fees on T7X. Every single investor in 7 continents around the world that come and invest in these real world asset projects, they all have to go buy the Trusted Smart Chain token. The TSC token is facilitating that ecosystem. But we also require the real world assets to pay those investors their distributions with the TSC token. So follow me on this. So a real world asset manager, and I cleared the SEC, and I have 12 months to go raise capital. So now I'm going to go offer usually about a 10% dividend to attract investors during that 12-month period. And all these investors will from around the world. My media company that I partnered with is going to go advertise to all of these all over the world, and all these investors come. So now as a real world asset manager, I have to pay them quarterly distributions. If my net worth is $50 million and I'm paying out a 10% distribution, then that means I'm paying out $5 million a year to those investors. Well, we require those real world asset managers to take their fiat currency and go to the open market and buy Trusted Smart Chain. And then they have to pay their investors with the Trusted Smart Chain token. Do the math on this with me. 100 real world assets on chain, all buying $5 million a year, is $500 million a year in annual demand. That's $1.4 million a day in buying pressure of the Trusted Smart Chain token. Here's the most important question. Tom, who are they buying those tokens from?
The node operators.
And do you get to decide when you want to sell and at what price?
Yeah.
Could you sell at today's price if you want to?
If I wanted to, I would, but I'm in it for the long run. And I understand as time goes on, the real stronger and have a supposedly higher demand for the coin.
Higher demand, just like you guys tell me in any asset class, doesn't matter what it is. It could be rare cars, Rolexes right now. Ladies, it could be Hermes. Anything that is rare. Carmen's laughing at that one. She liked that one. So it could be anything that's rare. As the demand grows, what happens to value? It's not magic. There is a formula. It's just mathematics. And now I'm going to take the formula a little bit further for a moment, because where does scarcity come from, right? We know where every real world asset group is creating more demand, but let's talk about the scarcity. So let's use Bitcoin as an example. Bitcoin did 2 things that were genius. They came out and said, there's only going to be 21 million Bitcoin. When they're gone, they're gone. So that fixed supply design led to an appreciating asset that's outperformed every asset class on the planet. Why? Because it's unlike the dollar. They're printing and printing and printing money and driving your dollar into the ground. So just so everyone knows, just this last week, we've crossed over 20 million Bitcoin minted. There's only 1 million left. And you guys know that it'll take another 90 years for the rest of those 1 million Bitcoin to be minted. So, and that's because of their halving schedule. That's the second thing they did that was brilliant. Every 4 years, they cut in half the amount of Bitcoin that is being into the open market. So we've had 4 halving events, and after every single halving event, Bitcoin has hit a new all-time high. Then usually about a year or 2 into that halving, the market starts to cool off again. Everybody panics and says, oh, it's over, it's crashing, the world's going to fall apart, and we told you so. But what no one's paying attention to is every time it goes down, the low was the old high. January of 2025, shortly after the halving event, Bitcoin hits $80,000, and you guys know people flipped out. They're like, I can't believe it's at 80,000. And then it shot up to 125, and then it crashed. And everybody loves to talk about the crashes. Well, it crashes down to we're around the 70s right now. I mean, the lows, the lows keep become are the old highs, is what I'm trying to say. So if you understand how it's cyclical, but what's happening is that halving event creates more and more scarcity over time, and that'll continue. That's why it's going to draw out over the next 80, 90 years. So why do I share this with you? Because every token cryptocurrency project has their own distribution schedule, their own circulating supply. In Bitcoin's case, even in those first few years, they were only minting a certain amount of Bitcoin. So there wasn't like they flooded the market with the 21 million Bitcoin. There was only a certain amount available. So as the demand grew and the asset became more scarce, that's why Bitcoin hit $125,000. We did the exact same thing as Bitcoin. People compare us to Bitcoin because we have the exact same tokenomics, identical. So we will only have 21 million trusted smart chain token that are minted. We have the same exact halving schedule. Every 4 years, there's a halving event. Do you guys realize that with Bitcoin and with us too, in those first 4 years of Bitcoin and then the first 4 years with us, 50% of the total circulating supply will be minted. So if you were there between 2009 and 2013 with Bitcoin, those people that were supporting the net the Bitcoin that went out. Now, the reason why I say that I like to be early is because there's not as many people on the network, so you're earning a bigger share of the distribution. So if you want to know what that math looks like, in the first 4 years, it's 2.6 million token a year, which is 7,191 tokens that go out a day. Now, it's important you understand this is governed by a smart contract. This is not a promise. This is a function of the smart contract. It can never be changed. It can never be altered. It will distribute per the Constitution, which is basically the algorithms that were programmed into it, until it's done. That's it. And who does it distribute it to? The node operators, the people that own the nodes. Now, here's some cool things to consider. You could go buy a Bitcoin miner today. You'll spend 9 or 10 grand if you want a decent one that will compete on their network. You're competing against millions of other people for 450 Bitcoin a day that are minted today, by the way. Here's the problem. You can't go back to 2009 to 2013 when distribution was at its highest. That's the problem. Where we are right now in our distribution is exactly where Bitcoin was in 2009. Even better, we only have 39,000 active node operators online. And we're only selling 200,000 nodes. Can you imagine if Bitcoin in their white papers said we're only going to sell 200,000 Bitcoin miners and that's it? And when they're gone, they're gone. And the only way you can get one in the future is if somebody's willing to sell you one. And they can choose the price that they want to sell for. What do you think those would be worth today based on a Bitcoin's price?
10 times more, I think, because they have over 2.1 million miners or Bitcoin mining operations, right?
Yeah, you'd be easily in the 7 figures. Easily.
Yeah, easily now, in the 7 figures. Yeah.
We're only selling 200,000. When they're gone, they're gone. And the reason we did that, just so you know, is on our network anymore because blockchains have evolved. Bitcoin's blockchain is very antiquated. It uses a ton of energy. You got to buy the computers that if you don't have access to cheap power, it's not very profitable. They run loud. They're noisy. They're a pain. The GPUs burn up every few years. So now blockchains today use nodes, and nodes can be hosted in data centers, just like you host a website. And they're very efficient, and you pay your $1.95 a month, your $24 a year, your node stays active. And as long as it's active, you get your daily distribution of trusted smart chain. So becoming a node operator, what does it mean? Why are you earning these rewards? I want to be very clear. This is not a passive investment. And I say that because number one, it's not an investment at all. It's software. Number two, you earn your rewards for your support and your participation. So what do I mean by that? Number one, your node is supporting the network by validating transactions, maintaining security, adding blocks to the blockchain, supporting those smart contracts for all of those different coin projects. It's storing and ensuring the integrity of the blockchain data. That's what your node is doing. You have to make sure that it stays active. So that requires active participation. You have to pay your monthly bill. In addition to that, you get a vote for every node that you operate. That allows you to participate in the governance of the blockchain. So there's different types of participation, and you get to choose how you want to participate. So we have some node operators that they keep their nodes active. They read the emails that go out on an almost daily basis, or once a week they'll read them. They get on the monthly update call so they can kind of get an update on everything that's happening. We have other node operators that participate in our affiliate program, like Tom. We're not network marketing. We don't want to be direct sales, but we do have a referral program. And believe it or not, we have people that are earning anywhere from 100,000 close to $1 million a year just promoting this project. And every time they go tell somebody about the nodes and somebody decides to become a node operator, all that does is build the community. It strengthens decentralization, it adds more trust, and it allows us to bring more real world assets onto the blockchain. So we have people that do that. We also have a lot of real world assets that come from the community. So we've got thousands of members, and a lot of them are friends with real estate projects, friends that are looking to raise capital. That's how I ended up on the call with Venezuela this morning in an oil, just a friend, a node operator. So my point is there's different ways to get involved, but one of the most valuable aspects of operating a node is getting access to the trusted society, because now you get access to the ecosystem. That's at least, and I don't want to speak for our community members. I mean, I am a community member. I'm not the owner of Trusted Smart Chain. I'm a node operator. And to me, it's one of the most valuable aspects of what we do. Nodes are currently priced at $4,000. And I say currently because every 1,000 nodes that sell, the price goes $100. And that'll continue until we hit a cap of $10,000 a node. And so right now, they're significantly discounted from where they will end up once we hit that peak. It's just supply and demand. It's very likely that you could come back in 3 to 6 months and nodes will be priced twice as much as they are today. So when you buy a node, you'll get an email. It'll tell you how to download the wallet and activate it. Once you do that, you'll start receiving your daily digital rewards. You also now get a vote in the DAO as well. We have people that operate multiple nodes. So why would they do that? Because if you have 5 nodes, you get 5 times that distribution. Remember, 7,191 tokens go out a day. The variable is how many nodes are online. That's why I like to be early. But if I operate more than one node, I get more than one share. So 5 nodes gives you 5 times the distribution. Easy way to look at that is, let's say a node, hypothetically speaking, was distributing 0.20 token per day, and I had 5 nodes, I'd be earning 1 full token a day. If I had 1 node, it would take me 5 days to earn a full token. We're, by the way, at about 0.18 distribution at this moment in time right now. Now, some people choose to operate more than that. Legacy level is 20 nodes, which gives you 20 times the distribution, also 20 votes in the DAO. Our luminary level is 50 nodes. Then we have our architect level at 100 nodes. We have our titans at 200 nodes. Tom, for example, is a titan. We have our sentinels at 500 nodes. And then we have our icons at 1,000 nodes. Now, it's important that you know that at Sentinel and Icon, we cap the amount of votes that they get at 200. And the reason for that is because we want to maintain decentralization. We don't want a BlackRock or somebody to come in and buy up all of our nodes. So we will never sell anybody more than 1,000 nodes. That's also identified in our charter. So you've got different ways that you can participate. We've got hundreds of people that operate at the luminary level or higher. And the reason for that is because they understand the utility and they understand what we're building. They understand the meaningful purpose that we've brought to the marketplace. And it's also, I'm not a CPA, this is not tax advice. I'll just tell you my own, what I've done personally. Under Section 179 of the tax code, you can write off software as a business expense. This is software. So at the end of the year, we have a lot of wealth managers that are here that bring high net worth clients that are here that are looking to avoid capital gains or wanting to offset taxes. This may be a solution that you want to explore with your CPA as well. In closing, I'll just say this. As an investor, one of the things that I look for now is I invest in infrastructure. I like to be part of the roads before the rush, so to speak. In any technology that's disruptive, you have the builders and the users. The builders are the Jeff Bezos of the world, the Mark Zuckerbergs of the world. They build the platforms that all the users end up using. And in this case, the builders are our node operators. And they're building this platform that really is ushering in this next era of cryptocurrency, the regulatory compliant era, tokenization of real world assets. $16 trillion is coming. And we don't know all 16 trillion, by the way. We just need a tiny little sliver, a fraction of that piece of pie to create so much demand for our token that this could be a lot of fun for all of the node operators. And by the way, those node operators are earning the Trusted Smart Chain token every day for their support, which is the same token that our node operators have to buy. It's the same token that our investors that are buying those real world asset projects that they have to buy. That creates the same utility that led to the second and third most successful crypto projects in the world today. So I'm happy to stick around, answer any questions you guys have. And thank you, Kurt and Tom, for having me here today. I really do appreciate it.
All right. Thank you, Travis, for your time. Let's see. There are some questions here. Gray has a question. If one buys 1 or 2 notes now, is one able to keep buying notes at a later time? Absolutely, Gray. I can tell you. I saw this presentation from Travis 9 months ago. And prior to that, I was watching another video of his, which we can share with you again. And within a very short period of time, 2 to 3 days, I bought 20 notes. And over time, and by then, back then it was a lot less than it was today. The notes go up $100 every 1,000 that we sell. So up to 4,000. Back then it was $2,500 per node. Travis said earlier in the presentation, very soon it's going to be $8,000 a node, because every 1,000 we sell, it goes up another $100, right? So anyhow, yes, you can buy 1 or 2 nodes now, and then you can keep adding to your node portfolio as time goes on. Hopefully that helps. Travis, any more tips on that?
Yeah, the only thing I would say, to just for consideration, and Tom will back me up on this, it never fails. People come back 6 months from now, especially when they come to the events, because when they come to the events, they really start to understand what they're a part of. And then they're like, dang it, I wish I'd have bought a lot more when it was priced at 2,500 or at 4,000 or 6. So take that into consideration as well. But yes, you can start off with 1 node, take a small bite, whatever you're comfortable with, and then you can decide from there where you want to go. I would highly recommend, come to Vegas, guys. Come out to Vegas on March 28th. It will be well worth your while. The education that you will receive, you will be blown away with what we've been able to create. And I think the most value is sitting there listening to the real world assets on stage, talking about why they're tokenizing, connect the dots and go, okay, well, that's a real world. They're tokenizing, and they're sitting here telling me they're going to be buying these trusted smart chain tokens because they have to. At that point, it becomes real to you. And so that's where I think a lot of people, it moves from their head to their heart, and they start to get excited about it.
Hey, Travis, you got to tell about the promotion. Well, what's the promotion in Vegas, man? We're giving away how many nodes? Come on. And I brought the event here on the screen.
Okay, so you can pull the event up. So we decided, since it's our 1-year anniversary, we were going to go all out and just make this a lot of fun. So we're actually giving away $500,000 at this event, and we're giving away $400,000 in nodes. So 100 nodes will be given away. And we're also giving away a brand new 2026 Corvette. It's going to be parked there. We're going to hand the person the keys at the event. It's not a lease. It's theirs to take off. And every person who attends gets a ticket, a raffle ticket. The other way that you can increase your odds is if you buy a node, you get 5 additional raffle tickets. If you buy 2 nodes, you get 10 additional raffle tickets. So you can increase your overall percentage to win the Corvette. The most that you can have is 25 total raffle tickets. But I mean, when you got a room of 300 plus people, it's not like there's 10,000 people in the room. So, it's a relatively good shot,
A hell of a good bet. So, it's the best bet in Vegas that weekend.
Yeah, it is. And so I'm excited to give a Corvette away. We just wanted to do something fun to reward our community members, because they've just been fantastic about their belief in what we've been in, and their conviction and going out and helping the ecosystem. So we're also going to give away 100 nodes. 20 of them we're going to give away in the raffle. And then we're going to give away an 80 at the casino party that night. So there's a daytime experience and a nighttime experience. The daytime experience is all the education, the speakers. Nighttime is a gala, a formal gala, where we have all kinds of really cool surprises and things planned. And we'll be giving away, we have a casino party planned. We've got a beautiful dinner, some recognition that's happening. So it's just going to be a great event all the way around. And I definitely would encourage you to come and check it out.
Black tie, Chica and Carmen and Gray and Yvonne. Black tie, Gayla. Can't beat that, right?
Chica, the nodes these are specific to Trusted Smart Chain. So these nodes, the 200,000 nodes, support the Trusted Smart Chain blockchain only. So just like Ethereum is its own blockchain, Solana is its own blockchain. That's why a lot of times you can't send a coin from one chain to another. Sometimes they don't communicate with each other. So Trusted Smart Chain nodes that you're buying support the Trusted Smart Chain infrastructure, including all of the cryptocurrency coins that are built on that infrastructure. you're earning Trusted Smart Chain tokens for your support. Now, you can go sell those tokens, you could swap them into Bitcoin or something down the road, but the software that you're buying is to support the Trusted Smart Chain blockchain.
Great questions. Kurt, I think you had your mic open. Yeah.
Thank you for the people from Phoenix that are here. When Tom told me about this, I was very fortunate being in Arizona because Travis actually doesn't live that far away. And I met him in Gilbert I like to look people in the eye before I actually make an investment in something when possible. And after that, I took a bite of the apple. I bought 5 nodes. And he was kind of layering out kind of what their timeline was. And once they started, jumping all of the hurdles that he had mentioned, I started buying more nodes and taking a bigger bite of the apple. And then my last purchase was really in going to Puerto Rico and then meeting the real world asset owners and finding out their reason for wanting to put their asset on the smart chain. And I met a gentleman that has a resort in, I believe it's Tulum. I also met someone that is in the medical office space. I think there was another person that's doing some kind of medical marijuana program. And, listening to their stories and some of the challenges that they're having in either capital raise or, trying to take out some of the funds from, having too much in that one asset and wanting to diversify, I kind of realized that as a commercial agent, I can actually bring this to my clients and actually solve some of their problems that they're, coming about, in capital raise, getting loans, that kind of thing. So not only is this going to help me as far as building wealth for myself, over my lifetime, it's actually going to help me professionally as a commercial agent, that I'm able to offer a solution that other people may not know about. And if I'm able to help onboard those people onto a smart chain and they can actually get the money out of their asset or fractionalize that, assets so they can get some of their money out so they can buy more assets, even better for me. It makes me more valuable as a commercial agent. And I am very excited about this. I wish I can do this event earlier, but in September, I am planning as part of Greater Phoenix in conjunction with the Scottsdale Association of Realtors. We have David Schweikert, who's running for governor here. He's also part of the Congressional Blockchain, and I would love for him to be in one of the breakout sessions along with Travis to kind of explain what's happening in blockchain. But again, I planned this in September because if you live in Arizona, you know that people don't like to come to Arizona when it's 115 degrees out. So that's why it's in September. But really looking forward to the event. I wanted to get some of my ARIA Greater Phoenix people on this call so they can see the opportunity as well. They can invite their, their friends or client base to get excited about this, and we can make a big push at that event.
Awesome. All right. Well, Kurt, thanks for organizing this. Carmen, thanks for being here. Of course, everyone here, thank you for being here, Mino and Gray and Chica and Yvonne. There was a question, Carmen, Chica, Travis, Carmen asked, Chica is part of a Global Real Estate Association in Japan. Can this be open to Japan?
We're actually in the process of opening Japan right now. So at this stage, we can have both affiliates and we can also have node operators. Japan has been plagued by, Asia has been plagued by crypto scams, and it's sad. And they're all looking for something tangible that they can actually truly believe in. They're going to be skeptical initially because there's been so many scams, but anybody that understands crypto that's willing to really look at what we're doing, especially as you start to look at the Explorer, you start to look at the CertiK audit, you start to hear from the real world assets. We've gone through this process in the last couple of months with a few pretty significant influencers out there in Japan, and they are now beside themselves. They're so excited. So the answer is yes, there's a great opportunity right now, especially in the Asian markets. And right now it's wide open there.
Carmen,